Welcome everybody to the Chinchilla Pickin' Podcast. It is November the 9th, 2025 at 4:12 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the one and only, the Baron of Bonds himself, Brandon Beaver. Brandon, how are you?
I'm good. How about yourself?
I'm doing fabulous now that I just now, I know this is the third week in a row. You mentioned you don't have a mic and you found one, but it's a headset mic. I just now ordered him a mic for all of you who are really concerned on Amazon just now. So it will be in the mail. Not in the mail. It's going to be delivered tomorrow. So that's weird. I ordered it right now and it's showing up in less than 12 hours. I mean, that's cool, but
Well,
like, yeah.
yeah, I've got this is actually my headset from work. And I left my charger at the office. So I'm just hoping it doesn't die on me in the middle of this. And I'll have to use my computer mic, which sucks and is not clear. Also today I don't have my glasses. I don't know if I took them to my parents' house when I visited my parents over the week. I'm gonna have to check with them, but they're nowhere to be found. So
So you're just a mess right
I'm
now.
a mess right now.
Yeah,
Absolutely,
just
yes.
just a hot mess over there.
Yeah.
Yeah.
Thanks for calling me hot, Dave.
That's all you took away. That's all he
Yeah.
took away from that was I was called hot today. You're gonna go back to Lindsay, say, "Hey Lindsay, I was called hot today." Um
Doesn't matter who said it.
Yeah, right. Yeah. I tell you what is crazy for me of all the things I've signed up for this coming up and all the things I'm putting myself through, I have no idea why. Uh, I get comments because they're like, "Oh, that's awesome. That's great that you're doing this. All these physical things I've signed up for, but yet I'm the one that has to crawl my body out of bed each morning and push myself. I have the discipline. It's not so backtrack. All these physical things I'm doing, right? I got a boxing match scheduled next year. I'm doing Paris High Rocks. I'm picking up skiing, going to be skiing in the Alps. All these things, physical, great, fun, yes. I'm pushing myself and sometimes a little too hard in order to do these. And give you my schedule tomorrow. My schedule tomorrow is I wake up and I have a 3 to 5 mile run. I got to come home, eat food, recover, rest, read. That's when I'm going to be reading, doing research, or
Hmm.
maybe some light cleaning around the house. Then at noon, I have another workout that's more high rocks oriented workout. Come home, eat, recover, rest. Then at 4 o'clock, I got a boxing workout. So I'll be at the boxing gym doing that. Come home, eat, recover, rest. And like that's my day is just three workouts, lots of recover, lots of research, do cleaning, different things in that time. But I need to be resting in between each so that my body can recover. I'm too old to be doing this, man. That's a lot. And then Tuesday's the exact same thing. Tuesday, exact same thing. It's
Wow.
running, it's workout, it's boxing, and it's just every day that I can, I do this. And some days I do workout and then straight to boxing. So, whew, I don't know why I signed up to agree to all this, but hey. I'm going to be doing it. So we're doing it. I got the discipline. So back to discipline and motivation. So this actually goes to investing as well, right? So if you're motivated, you're like, hey guys, I want to really get into investing. I want to invest. That's great. Motivation helps. It gets you off the couch right away. Motivation doesn't last. After a few weeks, you're like, I don't feel like doing the research. I don't want to read.
Yeah.
Motivation does not last. Motivation is great to get you started. It does not last. Discipline.
Right.
Discipline keeps you coming and keeps you consistent and keeps you going. Discipline helps you finish reading that book that Brandon and I recommended, which, by the way, we have a recommendation coming up in the show. But discipline helps you finish reading that book that we recommended. Discipline helps you research every single day, like come home from work and you're dead tired, or hey, I just did 3 workouts today. I don't feel like doing anything, but no, I need to do my research. I got an option that I'm hoping will stay positive come Monday morning, which I don't think it will. I'm going to go negative on it.
I
Oh.
I used to hate when that happened. So when I
But
used to only
yeah,
trade options myself, and then I also had a regular job, I'd buy an option, set my limit, and then, hope that it would sell. And then I'd look down and I'd be like, add my limit to, make, 30%, and it's at 28%. And now I got to hold it overnight. That's so frustrating.
It is, and I hate holding over options over the weekend,
Yep.
especially. But on Friday, I was up 50%. Very happy on my option. I don't think it's gonna. I think I'm gonna go negative Monday morning, unless some news breaks overnight, which I'm hoping is the case. But anyways, we'll get into that in a minute. But yeah, discipline. I can't stress that enough. You have to be disciplined with your investments, disciplined with your options, disciplined with everything you do. If you're not disciplined, you're gonna lose money.
Right.
So you got to be disciplined and do your research, and read the books, learn about the history, learn about economics, learn about how things work, what this ratio is versus that ratio, what this statistic is versus that statistic. You can't just use charts. Charts are just one piece of the puzzle to paint a whole picture of what's going on with a certain company. But
Right.
it's enough preaching. And I'm going to get off my soapbox here. We're going to actually talk about finance and investments for everybody who's listening. Rules. Brandon and I get together 5 to 10 minutes before the show and we tell each other what we're going to talk about. You actually hear the live back and forth right here on the show for you. I know I just said I was gonna cover something really quick before you took over the show, and now I just so I have severe ADHD if you don't know. And so now my brain has already moved on to 50 other million thoughts and I can't remember what it was I was just a minute ago talking about I was gonna talk about. That is how severe ADHD works.
Yep.
I have never taken medicine for this. I've been diagnosed since I was age 5 before they were diagnosing everybody and their mother. So I really do have severe ADHD and now this is oh well. Let's move on.
Do you have the anxiety that goes along with it? Out
No,
of
I do not have.
curiosity?
I
Okay.
weird. I have almost no anxiety whatsoever.
Okay.
And
So
it's
I've
weird.
got the ADHD, I've got ADHD, and I've got the anxiety that goes with it. So I don't take anything
I think
specific.
you have anxiety that causes ADHD symptoms, but I think
My,
you got that reverse.
well, my doctor said it that way, but um, I uh, I take anxiety medication. I don't take anything specific for the ADHD, but I take the anxiety medication, and it actually
Yeah.
helps with both.
Okay.
So I mean, it's something to look into. I'm on Paxil. Just
Well,
yeah.
yeah. Well, I mean, they said that my if I take ADHD medicine, which I've never had, but if I finally do break down and take it, it will actually help with my listening ability because I hear things and I don't hear things like I'll hear half of a sentence somebody said,
Right. Me too.
and it's not intentional. Like actively trying to listen. I just can't. I didn't catch like half that
Yeah.
sentence. I'm
Yeah.
like, can you repeat that?
So I have the same issues, and I'm gonna make my girlfriend listen to the first part of this episode so she can understand it's not just me.
I'm not the only one. See, this is a real
Right.
thing.
Well, you're in a conversation, you're always thinking about what you're gonna say next or what the other person's gonna say next. And
See, and
it's
that's not
hard
my
to
thing.
focus on what's being said right now. Right?
So that's not my thing. So like I heard you 100%, right? But
Right?
I just had a piece of my table break off, and the only reason I heard you 100% is because I'm messing with my table. That just piece of it just broke off. So my I was distracted with other mechanical things, and so I was able to focus intellectually on what you were
Well,
saying. It's
now I'm
funny.
distracted by the fact that your table broke, a piece of it, and I don't like how
It's a
does a piece
decorative
of a
piece.
tape
No, it's
Okay.
a decorative
Okay.
piece. It's not had nothing to actually do with the stability of my table. It's a decorative metal piece, and I could fix it. It just needs a cotter pin that fell off and throw it back in there. I am very handy with my yeah. Let's do
Okay.
this.
All right. Let's get
Stocks
into
and
the investments.
investments.
Am I going first? Because I
You
want to
are.
go
Go
first.
ahead. Go
Okay.
ahead. You're going first.
I don't know if you know this or not, but the U.S. just had the largest number of job cuts for the month of October in 20 years.
I do know this,
Okay.
and the headlines. Do you know what the headlines all said? Because
What?
I watch CNBC, Bloomberg. I read all the news articles. You know what they all said?
What?
AI.
It's also three times more than last year, this time
And
last
they
year.
all said most of it was due to AI.
Okay. Yeah.
That's what
So we're in the
everyone, all the
beginning
articles,
stages
everybody
here.
was saying.
I wonder if yeah, I don't know though. I think it's more to do with sustained high interest rates and
I,
tariffs than it does have anything to
I
do with artificial intelligence
no,
right now.
I disagree with that. I disagree with that because if companies are using tariffs the same way when the Ukraine war started, they were using Ukraine as a reason why they weren't hitting their goals. It's a company's not hitting their goals and they're using tariffs as an excuse. I want to actually see if they're going to say that and they're going to publicly say that. I want to see the numbers where the tariffs actually cost them more money and they had to cut jobs due to it
Okay, so I
because
I did
most of
not
it's AI.
I did not do a deep dive into this. I was just looking over what's been said on conference calls, and Wendy's noted inflation headwinds, rising beef and labor costs. So they did say labor. That's going to affect future profitability. That's all
Labor
I have on
cost
that.
is
I
not
didn't dive
tariffs.
it. I didn't dive deeper into it. It's not tariffs, but I mean the beef cost is going to have some tariffs embedded into it.
Some, yes, and we there is U.S. beef. They could buy more U.S. beef and less foreign beef. That would also help with that. But yeah, we have a deal with Argentina to buy some of their beef now. Brazil sells us beef. We get beef from a lot of other places, even though we should have more than enough here in the United
Okay.
States to supply us.
So I say this when thinking that, we've been talking about the possibility of a soft landing or a hard landing over the course of the last like 3 years, literally.
Well, you have. I haven't. I said it was soft. I said we're great. We're doing fantastic. I just recently turned bearish.
Okay. I think we're going to see whether or not it's true in the next like quarter, 3 months.
All right, so you're copying my playbook. Gotcha.
But not copying your playbook because I didn't even look at your playbook. I think over the next 3 months, we're probably going to decide whether we're going to have enough to know whether we're getting into a hard landing or a soft landing. Within the
I
next three
agree, and
months,
I
we'll be at
believe
the
it's
depth
going to
of it.
be. I agree, and I believe it's going to be a hard landing, but not too hard. It's not going to put us into a depression or anything. It's just going to be a correction, which we are already seeing in the market, and then maybe like 2 to 3 quarters of negative GDP.
Okay. So we got most of Q3 in right now. So far, the best performing sectors, and that's probably where it's going to stay. Um, Aerospace and defense, 76.5%. As far as earnings go, earnings acceleration, 76.5% for aerospace and defense. Information and technology was 24.7%. Financials were 20%. That's all fantastic. I was very surprised to see the financials on there. I don't know how much of that has to do with
20% what?
earnings growth.
Oh, earnings growth. So
Yeah.
20% of all financials reported earnings growth.
Well, no, no,
That's actually
no,
bad.
no, no. What it is it's 20% earnings growth for the entire sector.
Oh, well,
So
that's
it's, yeah,
excellent.
that's
Yeah.
excellent. Yeah.
Yeah.
And 78% for aerospace information tech. I mean, I thought information technology was going to be number one here with leaders like Palantir, NVIDIA, so
Yeah.
on. But no, it's aerospace defense, 76.5%. IT was 24.7%,
Well,
number two.
come on. Defense
Financials,
spending. Come on.
20%.
Defense spending
Um,
right now in this the geopolitical environment we're in.
well, we
I
got the
mean,
government. I mean, we haven't seen the quarter for the government shutdown yet, but I mean, that's
2 years ago,
ain't that
Poland purchased more Apache helicopters than any other country in the world from
Boeing, wasn't it?
Boeing.
Yeah.
Yeah, it was from Boeing, and now they have the second biggest fleet in the world of Apache helicopters behind the United States.
Wow.
So you see a lot more NATO countries that have spent on defense spending, and they buy some of the stuff from American companies.
Yeah.
So the U.S. economy has benefited from increased geopolitical tensions. Unfortunately, yeah, that's not the way you want to increase it, but like you have seen an increase of it. Like we have ally partners that buy some of our Tomahawk missiles and other missiles as well.
Sure. And that's one of the reasons why GE Aerospace has been off the hook and one of the best investments I've ever made. Um,
Yes,
I
well, they
love
make
GE
excellent
Aerospace,
engines
love
and
it.
they
Yeah,
have some good deals. Yeah.
right. Now we're expected to see this slow down a little bit in Q4. Earnings are expected to come back down, I think, to like 7% total for the overall index. But if you look at the analysts, the calls for a return to acceleration of double-digit earnings growth for the next 4 of the 5 quarters. So we're going to have earnings decline a little bit as far as growth goes in Q4, and then what they're saying Q1, Q2, Q3 is all going to be double-digit earnings acceleration again. So analysts look like they're still on pace to, or they're saying that we're still on pace for a soft landing, is what it looks like to me.
Which I don't see where they're seeing the numbers for this. And here's sorry. So we have, you know me, I always have like who's coming up this week on earnings. There's a company coming up this week on earnings. I really want to watch their earnings report in particular because it's going to give a good idea of the strength of the consumer, and that's Klarna. If you're familiar with Klarna, it's
Yeah.
one of these like a buy now, pay later, layaway type systems for those of us who are older, layaway. But one of those type of companies, and I want to see kind of what they say, how many consumers are using it to buy things like their everyday groceries or pay their bills and
Right.
not just discretionary items, but what are they doing because they actually need this? Consumer
Sure.
staples. You
Sure.
know, are they buying toothpaste and they're using Klarna? Because that's where I'm concerned at, and that's where I'm concerned we're seeing. We already covered like 2 weeks ago, I believe it was. I covered the auto loan industry and the fact that a lot of auto loans are they're underwater. They
Mhm.
borrow too much. They can't make these payments. Defaults are rising. I want to see what Klarna has to say this week. I mean, if they report excellent numbers that they've increased their revenue, that's not always a good sign for the economy.
Right. Right.
That's not.
Right.
I'm sorry. Great for Klarna, not for the economy.
Well, you could take it two different ways. I mean, people are being forced to use Klarna. Um, if they don't have the regular income to support, paying what they want to buy, or maybe people are using Klarna because they're confident that they'll have the earnings in the future to pay it back. I don't think it's the second one because I don't
I
think
don't
that's how
think it's the
most
second
people
one either.
operate.
Yeah, that's not. I mean, who would want to borrow if you can just pay for it?
Right,
No one's going to want to borrow if you could just pay for it. You'll just pay for
right,
it.
right.
Yeah, that doesn't make sense. I don't know. Maybe that's just
And
me. Maybe I'm just more conservative with
you're
my
not
money, and I don't know. Because
you're not
like,
a shopper. I mean, somebody could have a big purchase in mind and have the cash to pay for it, but they don't feel like they want to pay for it right up front. So, they'll gladly pay the interest on the back end in order to borrow the money.
what
It's
do you
not the
mean by
right
shopper?
financial
I'm not a
move.
shopper.
Well, you're not somebody who goes out like every day and makes purchases or every other day or you're not constantly looking for stuff. You're not somebody that back in the 90s would be at the mall every other week.
No. Yeah, yeah,
Yeah,
okay.
or
Yeah, I'm
every
not
other
a
day
shopper.
or
No.
whatever. Yeah, that's what I
No, I
mean.
usually I try to do clothes shopping once every so often. Because I was like I have my stuff. I mean, I posted like you and I went to the movie theater, right? We saw
Right,
Tron, right?
right.
So you see every that post, by the way, if you're on Instagram, you follow Chinchilla Picking on Instagram, you can see the picture of Brandon and I going to the movies. I posted out there just to show, hey, look, we actually do exist in the real world. But if you look at that hoodie in that picture, believe it or not, that's a designer hoodie that cost me quite a
Really,
lot of money. Yeah,
really.
right? I have a very low profile. I keep a low profile. I don't wear flashy stuff, but I do buy nice, expensive stuff when it's good quality and I like it.
Right,
And
right.
so like that's why I was like, what do you mean I'm not a shopper? I shop.
Well, okay, so let's move on here. The the fact that we're forecasting for decelerated earnings growth in the fourth quarter, coupled with the fact that a lot of people are a little bit worried about the inflated pot, well, they say inflated artificial intelligence trade, and that a lot of
It's
the
come down a
growth
lot. It's got
it,
deflated
it
this
is.
past
So,
week.
a lot of people saying we're probably going to see a 10% correction here. We don't know if that's going to be the case, but it might, right? So we got to start looking at ways to find values if that does happen. One of the ways that people look for value is they look at the price to sales ratio. And if the price to sales ratio is at or below one, they consider that a value stock and a possibility to buy. And it's just one thing that you look at. It's just one indicator that says, hey, this is worth looking into. Follow up on this and investigate everything else associated with the stock and with the company and see if you think it's something that you want to put in your portfolio. And what the price to sales ratio does is it measures how investors are willing to pay for each dollar of a company's revenue. So compare price to earnings or price to sales ratios within the same sector, for example, right? So if you're looking at healthcare, gross margins on healthcare, net margins at least, are typically pretty low. So healthcare companies are always going to have a low price to sales ratio, almost always at least. because they don't expect that those healthcare companies are going to be able to do much with the dollars that they make. So you're
Gotcha.
going to see low price to sales there, higher price to sales ratios with tech companies that are able to have higher margins. So it's not uncommon to see price to sales three, four, or even higher in the technology industry. And that doesn't necessarily mean that that company is overvalued. Again, when you're shopping for a house, you're comparing the price of your house to all the other prices of the houses on the same street or in the same neighborhood. You do the same thing with stocks
Gotcha.
because they're more comparable. That's more relevant, right?
Yes.
So it doesn't account for profitability, debt levels, or cost structure. So you have to use it alongside other metrics. But with the price to sales ratio, and there's a book that I reviewed a few years ago called What Works on Wall Street. And that has back tested all of these different ratios for like the past 75 years. And it has consistently came up in every test that the price to sales ratio is the most powerful measurement of whether or not a company is a good value.
What was the name of that book?
What works on Wall Street?
What Works on Wall Street?
Yeah.
Go buy it
Yeah.
now.
I can't remember the author off the top of my head. I think it's the guy that is the head of Oak Tree Capital, but I can't remember the
I'll
author. Should have
Google it
wrote
while
down the
you're
author.
covering. I'll
You can
Google it
Google
while
it. You
you're
can say
covering. Go
what it
ahead.
is, but I've read it twice. I just don't remember who wrote it.
Continue
Well,
with your thought.
well, okay. I didn't read it twice. I read it once. I cheated the second time with an
James
audiobook.
O'Shaughnessy.
There you go.
James O'Shaughnessy.
I think he's Oak Tree Capital. But anyways, doesn't matter. I read it once. I
Doesn't.
listened to it a second time. But anyways, I like to combine it with a PEG ratio because the PEG ratio tells me how much the company is projected to grow. And if we're really undervaluing that stock, if we're undervaluing their revenue and how much they can do with the revenue, then we're also going to be undervaluing most likely what they're going to do with their earnings. And if the PEG ratio can be lower, closer to one, below one, you're rarely going to get both below one. But if it's low with a low price to sales ratio, you're generally going to have a good buying opportunity.
Gotcha.
Yeah,
So price of sales below one, and you're
right,
looking at the PEG ratio is also close to
right.
one or below one.
So with a low price to sales ratio, there's a couple things that you need to look out for. So they're reflecting real problems sometimes. So it's poor margins. So people are willing to pay less for every dollar the company makes, but that's because sometimes that company is not doing well with the dollars that they do make and turning that into growth, right?
Yes,
So
reinvestment.
that's one thing that you have to look at. If growth forecasts are overly optimistic or based on shaky fundamentals, that's going to be misleading as well with the price to earnings growth ratio. So again, your research is required. This is not a one trick, one thing be all kind of thing where it gets you out of doing the work. It just helps you do the work.
And everybody's always looking for that one trick pony way to, hey, this always works. Let me pull up my chart. Even though I'm about to pull up a
Right.
chart later on in the show, let me pull up my chart and show you based off this. You see this flag, cup and handle, head and shoulders, dishwasher, wash behind the ears move here, and it's gonna be profitable.
Right.
It's ridiculous. No, do
Right.
your research, look at different things.
So generally speaking, what I would be looking at, because you rarely ever get the PEG ratio at or below one and the price to sales ratio at or below one. That generally doesn't happen. So I'm kind of looking for if the price to sales ratio is below one, I want at least a decent, PEG ratio. Doesn't have to be super low, but I want it to be like pointing to me, okay, this is a decent value. Or if the PEG ratio is way below one, I want the price to sales ratio to be decent and not overvalued. Citigroup falls into this category. PEG ratio is at 0.13. Like that's almost zero.
That's weird
It is
too.
super low, right? Financials have low PEG ratios, but 0.13, that's like statistically zero. That's like almost no earnings growth priced in there is what it seems like. But the price to earnings ratio is at 16.2. Price to sales ratio is at 2.4. So those two things aren't bad. Those are moderately valued, but the PEG ratio and Citigroup is in the middle of a restructure right now. So that's part of it. So people are kind of sitting on the sidelines and waiting. It's kind of a show me stock at this moment in the middle of a restructuring. But the investment thesis, I mean, we're looking at right now, we want to have a successful execution of the multi-year turnaround that they're in the middle of. Um, they've established clear financial targets here. They support the turnaround narrative. Management expects revenues to grow at a compounded annual rate of 4 to 5% by the end of 2026, coupled with significant annualized run rate cost savings projected to be in the range of 2 billion to 2.5 billion. The cost savings doesn't surprise me in the financial industry where everybody's diving into artificial intelligence to save costs.
Yeah.
What does surprise me is the compounded annual rate of 4 to 5% revenue growth, because that's actually pretty good for the financial industry, especially for a company that's been around for 150 years or whatever Citigroup's been around for. Um, so that's pretty good growth, and it's not judging by the PEG ratio. I don't think that's forecasted it into the stock. I don't think people have priced that in yet. So I think Citigroup is a buy personally.
Just based off these indicators.
Right. But I got a couple of more things I want to get into when it comes to Citigroup. For that, I got to give you some definitions. So let's not be too boring with this, but I'm going to try to give you some definitions here, all right, for you to understand what I'm about to say. Um,
Education time with Brandon.
yeah. So when I talk about a tangible asset, that's a physical asset, right? So if somebody owns a company owns like 40 forklifts or something like that, those are tangible assets that can be converted into cash. Intangible is something you can't see. So that could be software, even though I would consider that tangible these days.
Patents.
It's not, but they consider intangible patents and any kind of intellectual property, patents, copyright, all that stuff. Brand loyalty, brand capital is even
Yep.
intangible asset. Um, so that's what I'm talking about. When I talk about return on tangible common equity, they're talking about return on the assets they own, the physical assets they own. And this is often used in the financial industry that measures a company's profitability by showing how much net income it generates from the tangible common equity, the stuff they own, that's physical. Um, it's calculated by dividing the company's net income by its average tangible common equity. It provides a clear performance of the efficiency by removing intangible noise, one-offs, and such like that, and things that you can't particularly touch. Um, so that's what we're looking at with Citigroup. You really need to look at return on uh, tangible common equity, which they're targeting to level out at around 11%, which is pretty good.
Yeah, that's 11%. Okay.
So that's
I
what I
like
want
that.
people to look at. If you buy it, watch that earnings report, see if they're hitting that goal.
Also see where they're at in the restructuring. I mean, that's a big
Right.
deal too. If you're restructuring
Right.
the whole company, I mean, where are we going? What's
Yeah.
the new viewpoint? Where's our new mission?
And what's the timeline on that? But what we're measuring the effectiveness on this on revenue growth, 4 to 5%. We still want to see positive earnings growth, obviously, and we want to see that return on tangible common equity at 11%, 10 anywhere between 10 and 11,
Yeah.
really. So
Nice.
I made my call here, right?
I
Um,
like that you're making more calls than I am now lately.
yeah, sometimes I hate to do it because Citigroup, it's like I'm not excited to buy it, but it's a
It's not a
value,
sexy stock. It's not.
right?
It's not. It's something that's
Right.
boring, but it might, it's like a Campbell soup. It's going to make you money.
Right. I think it will. Yeah, I think it will. I'm down on Campbell's Soup right now. It's one of the three stocks that I own that I'm in the red on, but
Wow.
I haven't held it that long, so it is what it is. Speaking of stocks that I haven't held that long, Palantir reported earnings. I think I bought this thing like I don't know 5 6 months ago or something. Still up 60% on it, so I'm still happy. What I always say about Palantir, this thing moves like very fast. This is very similar to like Tesla 2013, 2014, Amazon 2010. It's going to be very volatile. It's got a high expectations here. So anytime people have the excuse or the reason to take profits, they do it. And when you have a pullback on Palantir, you buy it.
Man, look at you. Two
Uh,
calls in one show.
right. And this is another. So, I mean, they had quarter three revenue came in at 1.18 billion. Um, that's an accelerating year over year growth rate of 63%.
Man.
Furthermore, adjusted earnings per share, 21 cents a share, substantially exceeded the consistent estimates. Um, Powerful operating leverage here, in my opinion. This is a robust 51% operating margin. This company is on all four cylinders and it's driving very fast, which is why you see the price to earnings ratio like 500 or whatever. It looks crazy. But just like Nvidia a couple of years ago, which me and you missed, I don't plan on missing Palantir here. It makes
You know,
sense.
you know what's funny is that I missed it personally, but everybody during that time, and I had the DMs to prove it, that DM'd us for chinchilla picking, I recommended NVIDIA.
I know.
And we have listeners who still listen to us to this day. Mike, thank you for listening to us all these years. Longtime listener, thank you, Mike. He bought NVIDIA during that time. He's done over 10 times his return on his money.
Yeah, which is awesome.
Yeah.
And we were recommending NVIDIA to be fair when we first started this podcast. We
Oh, I loved it.
recommended it. Then when it shot up and we were like, oh, we don't know if this is, if this is rational, if it
Yeah.
can sustain this. At the very beginning, when all we were seeing from artificial intelligence, generative AI, and stuff was Chat GPT, we didn't see how much money could be made. And then
Actually,
it
I think
proved
it was
it
before that. It was before the whole AI situation
that we
really
were
got
recommending.
mainstream. Yeah.
Yeah, you were recommending it at least.
Back in the old private Facebook, so we had a private Facebook group and everybody, and we had CNBC contributors on it. I can actually say that we had CNBC contributors. We had people from Warrior Trading, from all these different places on it, and
Right.
I was loving the video all the time back then. I was like, I'm
Here's
going to name my next kid NVIDIA.
so here's the thing. Here's the thing that caught my eye in this report. The US commercial segment was up 121%. So we always talk about Palantir in relation to the US government. We know the Trump
Yeah.
administration likes it. We know they're doing deals with Dubai. We know they're doing deals with a bunch of different governments all over the world. The commercial aspect of this, the business industry is starting to catch on to this, and this is growing very, very fast. So 121% year over year. That allowed this company to materially raise their full year 2025 revenue guidance to about $4.4 billion. And then they are committing to US commercial growth by the end of this year now, altogether is going to be 104%.
Man, that's huge.
Yeah.
Huge.
Gap
Huge
gap
number.
net gap net income reached $476 million. They got a 40% margin on that. Massive 231% year over year increase
Nice.
on net income. And that's always to me, that's the stat. The top line growth is always the most important to me, in my opinion. I know a lot of people like the profitability, but there's
Yeah.
so many different
I'm
ways that
a lot of
companies,
people.
yeah, but there's so many different ways that companies can make their earnings look a lot better accounting wise. And the first one is just firing people or laying people off. There's a billion different ways to top your earnings estimates. The revenue growth that there's no, well, I don't want to say no. Okay, there's always tricky accounting somewhere, but the revenue growth is a little bit harder to fake, so to speak. And
Gotcha.
that shows your soul of your corporation when
Sold.
you can change so many different things in your accounting and you can change so many different things within your organization to increase your earnings even while revenue is coming down, even while there's a softer business landscape for your product. The earnings you can manipulate a lot. The revenue is a little bit harder to do.
All right.
Did I make
Palantir buy, Citigroup
Yeah.
buy, two
Palantir's a
buys.
buy. Yeah. US government revenue grew 52% for Palantir.
Gotcha.
Yeah.
All right, man.
Sticking with it, man. Every pullback you buy this thing right now.
I love it. Talking about sticking with it, I want to talk about a company I'm sticking with. I DCA'd this company this past week. Um, it is LENZ Therapeutics. It is I was down 50%. That's a huge amount to be down. I
Yeah,
DCA'd. I'm no longer down 50%, but I am down even after DCA, and that's dollar cost average. So that's where a stock you buy it, it drops in cost, you buy it at a lower price, your average cost basis is lower. So I DCA'd LENZ Therapeutics. They reported earnings this past week. The earnings they reported were the first time they actually got not profitable, but they made millions in positive earnings for October, right? Now October wasn't part of last quarter. So you're like, Dave, why are we talking about October? It wasn't part of last quarter. October was the first month that LENZ Therapeutics was allowed by the FDA to sell products.
sure.
So that's why it's important. So the first month that LENZ Therapeutics is able to sell products, they went ahead, they got out there in October, and not even just for the whole month of October, for a part of October, they went ahead and they had over 5,000 prescriptions already filled for its products. So if you don't know what LENZ Therapeutics' main product is, it's Vizz, and it mainly focuses on adults who lose that near vision. So if you need readers, you ever heard of readers for glasses, and you see older adults with need readers, LENZ Therapeutics has eye drops you can put in that last for over 10 hours, and you no longer need those readers. You just have the eye drops, and it works. Over 5,000 prescriptions filled. They believe this is going to be millions and millions of Americans who are going to start using this. They signed a deal with Sarah Jessica Parker to be a spokeswoman for LENZ Therapeutics come January of 2026. They also go direct to consumer in January for Q1 of 2026, maybe not January, but Q1. So there's still a lot of growth opportunity here. I see this still taking off. I'm a big time buyer of it. I own a lot of it, and I bought more after it went down. I'm still holding it. I believe this is going to go right back up. And now that I have a lower cost basis, I'm going to make even more money. That's what I look
Okay.
at LENZ Therapeutics. Do your research yourself. See if you agree with me or not. That's up to you. That's up to you. I've let everybody make their own determination, but that is just one that I believe is a buy right now. Brandon, I'm going to try to go ahead and share my screen here. So,
By the way, maybe I do need one of those lights that you bought because it's super dark here in
yes,
Ohio now, and I, as a result, because I don't have my window light coming through, am now super dark as well. So
right.
I need to try to fix that, I guess, for the
All
winter
right, here we
season.
go, guys. I am sharing my screen. If you see right now, I got the chart up.
I cannot.
Um,
So there you go. You're on.
yeah, I know. I got it, man. I do this all the time. I got my meetings. I've used different, not all kinds. I haven't really used this one, Teams, too much, but here we are. What we're looking at here, if you're wondering, this is a chart of Tesla. And so this was brought to me by someone Brandon and I both know. He does a lot of option trades. And how he described his option trading is he follows a number of stocks. Tesla is one of them. And what he has noticed is a trend. Now, this is very risky to do this off of a trend because that trend could break at any time, right? Trends are not always totally 100% consistent, reliable. So I do preface by covering this, saying that this is somewhat of a risky move to make, but it has worked for him. And how
Use
he
your stop
described,
losses.
yeah, stop losses helps as
Yeah.
well. How it works for him is you can see here this up and down movement everywhere. Like it goes up here, back up, then back down. And what he's down here, then back up, then down, and these big movements, right? We call them gapping up or gapping down. That's the terminology that you'll hear. It gapped up today or it gapped down today. You can see it's day by day here. I have it broken down by days. So it's gapped up today, it's gapped down today. What he has mentioned to me is every time Tesla will gap up, so that's when it takes a big jump up or a big jump down, gapped up or gapped down, it moves too much, and then it comes back down the next 2 days, and it compensates for that big move that it just made. So he watches for the big moves in Tesla. So you can see right here, this candle right here. This is called a candlestick chart, and this candle right here was a big move. This candle was a big move. These two candles right next to each other were two big moves. You can see these big candle moves. He watches for that. And then if it has a big move up like this, he'll go ahead and put a put in because
Hmm.
Tesla will come back down from that big move up. When it comes down, he goes ahead and puts a call in because Tesla will compensate for that big move, that gap down. This is one way that he has found out that has worked for him. All right, I'm going to stop sharing my screen. This has worked for him in one way of playing options. This is a very risky maneuver to do, but it has worked. And he shows Brandon and I his profit loss, his net wins, and majority of the time he actually makes money. He makes
Yeah.
thousands of dollars each time doing this. And he actually makes a decent income just playing Tesla options alone. He does other options as well in other companies, but he makes a decent income just doing this. And so that is one way you can do this. Again, it's very risky. Now we've known this guy for a number of years. He is not new to this. This is not his first time doing this. His first option, I believe, was when I first met him back in 2017. It's when I met Nick there, and not Nick Young, the guy who gets on here every now and then. This is a different Nick. And I think it was 2017 when I first got into him in the stocks and investing. I think options was where he just stuck, and he loves the options, and that's where he puts his money. But yeah, it's one way to do it. I don't play too many options too often. I do every now and then. I have an option right now, but I did mine on UVXY. So yeah, it's options are risky. They go up
They
and
are,
down. You gotta
absolutely. They
really,
are.
yeah, you gotta really know what you're doing and be confident. I don't recommend it for anybody that has less than 1 year's worth of experience.
Right.
Definitely do
No,
not.
no. I mean, even really less than 5 years of experience sometimes. Depends though, like, how
Right?
adaptive you are and how disciplined you can be. Because I mean,
Discipline.
you'll see,
That's the word of the day today.
easily,
Discipline.
easily sometimes see 40 to 50% moves in your entire portfolio if that's all you're doing is options.
Yeah, because like I'll tell you, my UVXY option, just that one option I own on Friday, I was down at one point by about 50%, and then I was also up at one point by
Yeah.
50%.
And
It
that
was,
also that also is sometimes the tricky aspect of, if you're working and you need to put your phone down and you're not watching it and you set that stop loss, then sometimes that triggers when it necessarily shouldn't. It's hard to use the hard and fast rules and options.
yeah, I don't
Whereas
do
if you're
stop
day trading, a
losses.
stock moves a little bit slower, right? So,
I
yeah.
I I don't do stop losses. I did it at one point, but I don't do them anymore
I
because I understand that the market's going to move up and down, and I understand that sometimes a company stock price will go down, and I still believe in the company. I believe in the value and the mission, and so I don't care if it goes down 10, 20,
right.
50%. I still believe in the company, so I'm just going to DCA. I don't want to put a stop loss in.
Well, as somebody who is specifically only doing long-term investments now, stop losses are out of my vocabulary
Yeah,
completely. They don't make any
mine.
sense for me, but
Yeah, mine as
um,
well.
all
All
right.
right.
Dave, I
I,
know I know what you're coming to soon, and I'm ready in my boxing gloves here. So,
All right. So before we get that, I had a number of articles. I'm only going to do one article because I don't want to take up an hour and a half of everybody's day. I want to keep it to around our regular time. So one quick article here, and this one came out yesterday on at 7:04 a.m. on 11/8. The headline reads: Major retailers promise a cheaper Thanksgiving, but there's a twist. So I wanted to cover this. We're getting close to the holidays, getting close.
by the way, real quick, retail was up 13% earnings year over year. And that was something that really surprised me. But go ahead. Sorry. I
It,
forgot
it
to mention that earlier, but you know,
surprises
for,
me too because I don't buy retail. I stay out of
right.
retail. But here we go. So grocery stores, Walmart, Target, Aldi are trumpeting their Thanksgiving meal deals as more affordable than ever, right? So every year all these companies they come out these grocery stores come out with, "Hey, come get your Thanksgiving meal deal over at us." Whatever amount of dollars for this, this, and that, right? Trump's even come out recently and made comments about this, applauding these retailers, these grocery stores for doing this, because this is something that the economy is not doing too strong. A lot of people's funds are a little weak right now, right? So we want to see more of these deals. So how are they doing that? That's the key here, and that's what this article goes into. It talks about Walmart's. It starts off with Walmart's, right? So, and just to give, this is how they're affording this. Walmart's this year features nine great value private label brand items. A private label brand item is a Walmart branded item versus a more, it's like, think of it generic versus a brand name, and that's the difference, right? It's going to be more generic brands here. So it's 9 out of 15 items are great value brand compared to with 9 out of 21 brands last year. So it's a higher percentage of in-house Walmart brands in order to afford this. The company also subbed in a stuffing mix and sidelined in onion, celery, and broth. Those switches allowed for a revamp with the turkey. So they went from changing it from a butterball turkey to a honeysuckle. It saved them over 11, almost 11, 10 cents a pound on that. So they're doing different things in order to create this meal kit, what they say. So this says the meal kit now costs $40 and feeds 10 versus $56 to feed 8 last year. So they're saying they're able to provide more for less by switching to more Walmart great value brand items and a different brand of turkey. So that is how these companies are doing. Aldi and Target all doing the same thing. They're switching out the different things. They're switching out the brand of turkeys. They're switching out to more private label. It's actually going to be a good for the company. So if you look at it from a retailer standpoint, that's actually good for Walmart, right? Because then Walmart's going
Mhm.
to take home more of the profit from that. So they're going to get more of the money coming in from that. And so I think this is actually good for Walmart, Aldi, and Target that they're doing this. But it does show the true cost of groceries in that they have to do this in order to maintain that value of a meal kit for Thanksgiving.
Okay.
All right. All right, let's get into it. What Brandon was alluding to here is the earnings coming up this week. Every week, you guys know this. I cover some of the earnings and what I'm looking for, why I look at these, to kind of give you an idea of when you're deciding what you want to watch for the week and how you want to play certain stocks and investments and how do we find out about how things certain sectors are doing. And that's kind of why I go over this list, right? To give you an idea of what I look at so you can see what you look at, so on and so forth. All right, so Monday morning we have Brandon. Just give you a heads up, yours is gonna be last. That's on
Okay.
Thursday. So
All right.
Monday morning we have Barrick Mining. Barrick Mining is a mining company. Right now they have two major things we're looking at. It's copper and gold. They're a huge gold miner, but they also have some copper mines, especially in Zambia. I want to see some more progress in that and see where they're at in the copper mine there because that's a huge copper mine. Instacart's also reporting on Monday. The only way that Instacart was not operating at a loss was ads. So actual business was not producing a profit for them. There was the ads that was making them a profit. I want to see if they've come a long way since last year when I covered them, if they are actually now producing profit without the ads, or if it's still just an ad-driven company. And that's the only reason why. Occidental Petroleum also reported Monday. Berkshire Hathaway has a huge position in this company. I believe they own a large percentage of
Mm-hmm.
Occidental Petroleum right now. Occidental has a good thing going with them with the Russia-Ukraine war because there's natural gas need in Europe, and Occidental Petroleum can be one of these companies that provides that natural gas to them as long as they have a reliable shipping company in order to do it. I've mentioned this before. Look for the shipper that they're using. That's a good play there. But Occidental Petroleum, I don't know if Berkshire Hathaway is profitable on this or if they are negative on this because the stock price went down when oil price went down. And so I wonder where they're at and what the price looks like. You do look like you are on a witness protection program
I
right now,
know I
Brandon.
do, don't
There
I?
you go. So Wednesday,
Change my voice.
there you go, right. Wednesday, you have Circle Internet Group. So that's going to be crypto news, kind of give you a pulse on this because Bitcoin is taking a big drop down, which Brandon is laughing at everybody who owns Bitcoin about 20% drop in price of Bitcoin. You also have Klarna, which I mentioned earlier in the show, to give us a good idea of consumer strength on Wednesday, and Cisco. Cisco, I want to see because right now all the AI, everybody is negative AI. They're saying it was overblown, overvalued. Cisco actually just provides the infrastructure for these AI companies. They don't do any of the actual technology software side. So let's see what Cisco is saying as far as like infrastructure deals, how much of the infrastructure they are putting out there for companies, and what kind of infrastructure is going in place.
Okay.
This brings us to Thursday. So let me set this up. There's a company out there that we have gotten some DMs. I've actually got people who I know personally have come up to me and asked me about this. This was a call from Brandon a while back. People bought off of this call, and so they're asking Brandon, "What is going on?" This company reports on Thursday. The company is Disney.
Sure.
Disney, Brandon, what is going on with Disney? Why is it not moving?
It hasn't been for, I mean, look, I bought this company back in I think 2022 maybe. It was a year after I bought GE. And I've made I don't even know how much money I made off GE because I didn't keep count of the
It's just too
spinoffs
much. The
there.
trucks were just coming
Right.
in, dumping the
Yeah.
cash.
Yeah, I made 5 times my money just on the just on the GE aerospace stock that spin off. I don't know about healthcare or even Vernova off the top of my head. So that was a huge winner. Disney has not been that so much, but I'm still holding it here. And I think you should still hold it. I think that, it wasn't that long ago that streaming finally turned profitable. It wasn't that long ago after years and years of speculation and fighting that Disney finally got a hold of Hulu and were able to,
That's less
increase
than a year ago. Less
yeah,
than
it
one
was
year
like
ago.
100%. So now they're on track with Netflix as far as viewership goes. If you add in the Disney app, the Disney Plus and Hulu and ESPN and all of that, they're right there, very close with Netflix as far as users go. So will that translate into Netflix style valuations? I don't know. I think it should with the amount of IP, intellectual property, and the catalog that Disney has that is just absolutely unrivaled by any other production company in the history of the world. Um, I really still believe in this. I wish we had some sort of plan for succession for Bob Iger. I don't know when that's going to happen,
That
but
has
I
been
think
one of my biggest criticisms of Disney is that if Bob Iger leaves, the company just keeps going down every
I,
time. He has to keep coming back.
I think he's going to wait until we have sustainable stock growth here. I've owned this thing for like, I don't know, 3 years. I'm up 20% on it. It's not the greatest.
That is all. So
Yeah.
for a lot of people, that would be decent returns, but for us on Chinchilla Picking, that is awful returns.
Right. So with that being said, oftentimes these stocks that, get the shine taken off of them, the reputation sticks for a while. But once the reputation of, being lackluster goes away, Micron was one of these stocks that sat in value territory for years and years and years and never moved. Once it finally did, it was pretty spectacular. I don't think that Disney's going to move like a semiconductor stock, but I do think that it will go higher and faster, hopefully. So I'm still holding here, right? But it is interesting to me that people bought Disney and they're calling me out for Disney. And I'm not being defensive here. But look, I just bought, Palantir like back in March. I'm up 60% on it. I bought Nvidia about the same time frame. I'm up about 80% on that.
Not being
So I mean,
defensive or
there we
anything.
are, right? Like we are. And you were talking about, you didn't think Nick Voigt was going to come on the show and talk about his option strategy, and I'm like, is he afraid of being wrong? Has he ever met us? Listen to us. We've been wrong plenty, but we've been right
Uh,
a lot too. And when we're right, we're like really right.
yeah,
So
we're right
there's
more than we
that.
are wrong. We talk about our
Right,
mistakes. We talk about the ones we get wrong and what we learn from them, what we take away from them. But
right,
yeah, Disney, you are up, you are profitable. So I mean, you're technically not wrong, but you still see that long-term growth there, and you're
right,
talking about the streaming industries where you're thinking you're going to see it.
right.
So
Even ASML, which I called a buy back in May, bought it myself, and then bought again back in July. I'm up 40% on it.
nice.
So yeah, I mean, we get things right on this show pretty a lot. Disney happens to be something that was, eh, it wasn't wrong,
But that's the one
but
everybody bought.
I know, I know, and there were hundreds of other, well, I don't want to say hundreds, but dozens of other better investments to put your money in, unfortunately.
Right.
But let's see how the next couple of years pan out. for
There you
Disney. I mean,
go.
there's a lot of what I want people to watch on Disney right now is watch and see if the profitability on streaming is still growing, and then also watch the capex. We don't want that to go too high. We know we got some large projects, a new cruise liner in place. I think Disney's was it Dubai that Disney's coming, to.
Yep.
So there's going to be a lot of money going to that. So you're going to expect high capex, but we want to keep the profitability in line as well. So
Gotcha. Final thought, Brandon.
stick with Disney if you own it. It has been frustrating for me though. I'll be honest with you, but buy Palantir on the pullbacks. I do think Citigroup is a buy. Financials have to be your thing, though. Financials are not the same thing as buying like Walmart. They're a lot more confusing. There's a lot more to them. So if you don't know how to read the financial reports of banks, then maybe take some time and figure that out first.
There you go. All right. Final thought from myself is I DCA'd on LENZ Therapeutics. I believe in the future of this company. I am holding all the way through Q1. So I want to see what Q1 produces for this company before I would say it's not going to move because I believe that will really catapult this up is Q1. When we start seeing the ads on TVs, when you start seeing the spokesperson get out there, when we start seeing all these direct to consumers, that's when it's really going to take off. That's why I
Mhm.
believe in the company. So that's what I'm waiting for. You're saying, what are you waiting for, Dave? That's what I'm waiting for. I'm
Right.
waiting for the numbers from Q1. Um, I believe there's the AI pullback. I believe was justified. There was a lot of overvaluation. I don't believe it was justified across the whole sector. I believe there was some good companies in there that got slashed that didn't need to get slashed this past week. So when you see that, when you see a whole sector just get taken down across the board, there's always one or two companies that were good that were undervalued at the time, and now they're really undervalued. But you have to do your research. You have to find those. They're the diamonds in the rough. You got to look for them. So do your research, make sure you're doing it right, and be disciplined in it. All right. That's my final
Mhm.
thought for today as we go into next week. As always, we hope we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.